Kevin Brierton here. You're with your monthly market report for April 2026. This is going to be all about interest rates, what's happening with the war, and what's happening with inventory, and how that's benefiting buyers that are looking to buy something with the affordability right now. But it's also improving things for sellers that are looking to buy another property and go and making a transition. Rates are volatile, but the affordability has still improved, which is important. Now, Mark Fleming, chief economist, said geopolitical developments can certainly create short-term volatility. Energy spikes can briefly push up yields, which they're doing, pushing up mortgage rates. They can push higher as investors hedge against the near-term inflation risk. Be careful with this market right now. Perfect advice versus expert advice. People are looking for this perfect answer, and I get people reaching out to me, hey, what do you think I should do? And they do that for 10 years. Be careful on looking for that perfect answer. Look for expert advice and helping you navigate what is going on in your world. Everybody's situation is different. So that's the difference really of expert versus perfect advice. Mortgage interest rates have increased overall. So we saw bottoming out in February this year, and then they've moved up based on what's going on with the war and the inflation fears. Now, we have seen an improvement in interest rates recently, just a slight improvement. So mortgage-backed securities work inversely related. So we actually saw this big move down, which is bad for interest rates, kind of a bottoming out here and then backing up, back up. So we were really kind of at the best market interest rates right in like that end of March, end of February, beginning of March, and then it dropped off. And now we've kind of bounced back. So we've kind of been in the same level, same range here since really early April. And we have a little bit of a improvement here. We'll see where it actually goes to at the end of the day and how that's going to actually impact interest rates. But this has been an improvement though. This is really a good sign because even though the war is still going on, we still see a settling down in interest rates. So just because the inflation numbers are coming in a little more concerning doesn't mean that interest rates are going to continue to go up. So this is very, very positive. Mortgage rates don't move in isolation when global events inject uncertainty in financial markets. As long as uncertainty remains elevated, rates will continue to swing. So just know that this might be an evolving process and moving as we've seen over the years and the months. But here's the thing. If you're looking to make a transition or somebody you know is looking to do something and they're waiting for something, the recent highs of rates down on a $500,000 loan amount, this is a $270 a month payment decrease just with the rates where they were at recently down. We had a couple years of in that 7 range too. So we have seen an improvement of affordability. We're seeing the top 3 loan programs we're seeing right now are mortgage bridge loans. So you could buy before you sell programs. This is a really good program for transition and also making your offer stand out. So you don't have to lose out on a house being contingent. This is an important piece of the puzzle. Interest rates will improve. So you can use these programs to kind of temporarily bridge the gaps on what you're doing. So, and when they dip, use that volatility, you can catch that dip and do a refinance. Temporary seller buy downs are back. So temporary seller buy downs are great because you can do a lump sum from the seller, get the seller to pay for it ideally, and you could buy down that interest rate. Bank statement programs are big right now. Tax season just happened and it's still happening for people to file extensions. So maybe a business owner doesn't have as much income as they thought on paper. These are programs that you can use for a first or second mortgage, which are really beneficial for business owners. Mortgage News Daily, Matthew talked about even if the war were to end today, there is sufficient disruption in the infrastructure and big enough initial spikes in energy prices to create economists to refer to a second round of effects. So just because the war ends, it doesn't mean that everything, rates, go down or everything kind of goes back to how it was just a few months ago. Just this effect will kind of take its toll over time, even if the war does end. So waiting for the war to be over isn't necessarily the right move. Average major market has seen purchase payments improve year over year. This is huge for affordability. In the same line is incomes are rising faster than home prices. So we had income wage growth continue to either stay flat or go up a little bit. We saw a little bit of an increase recently, but we have year over year home prices that are continuing to go down, not crashing, but going down. We saw a big dip in this time period here, but we've seen kind of a leveling out here, but wages are starting to go up, prices are going down. That's great for affordability. Ultimately, affordability is determined by the interplay between mortgage rates, home prices, and household incomes, and how those forces evolve across local markets. So it's all connected, not just mortgage rates, it's home prices, income, all connected. Seller activity has increased. We've had more inventory. Despite the global situations, we have seen positive momentum, increased listings, edging up nationally. We've seen higher listing numbers, highest since if you go back into 2023, in the last couple of years, and the green bar is active listings. So how much that's significantly higher than it was in 2023 and continuing to. People have to move on with their lives. Even if rates haven't come down, they have to buy, sell, take cash out, do what they're doing, and make things happen. Sellers are jumping back into the market. We have more sellers coming back in the market now. We have activity and listings growing, varies different states, of course, but we have seen a positive move with more listings coming to the market and more opportunities for buyers and also sellers that are looking to move. So not all sellers are willing to negotiate. This delisting number is kind of a key point to how are you going to make your house listing stand out, and also if you're buying something, how are you going to navigate that? We have seen a high delisting, highest in 2025. If you go back in 2021, we have very low delisting, so people are taking their house off the market. But I actually think it's less about the delistings, because what's happening is people are also relisting their house, so they're delisting it, but then they're relisting it. So if we look at the relistings, home relisted on the rise, their highest, go back in 2016, relistings are higher than the last 10 years. So people are delisting it because they don't want to keep their house on the market and have it get dated on the market, but they're relisting their market to get that kind of reset of the days. Sometimes that works and sometimes it doesn't, because you can just look back on what it was listed at before, and all that is on record there. So when you're listing your house, you really want to price it correctly, and you want to have a good game plan as far as so it doesn't sit too long. Because if it sits too long and then you have to relist it, that really could hurt your chances of selling quickly. Buyer activity is increasing, so we have more buyer activity over the years. So people are jumping back in and ready to get moving as listings have increased as well. Zillow's chief economist, buyers have more homes within reach to choose from to go along with the friendlier conditions. Friendlier conditions we're seeing live real time is negotiating those temporary seller buy downs. We negotiated a new roof for another buyer. We've negotiated seller credits for closing costs. A lot of this is workable right now in a more balanced market, and a friendlier market, better conditions. Zillow's chief economist also said Zillow's latest data suggests that buyers and sellers are starting to regain confidence. Now that's buyers and sellers, so we're trying to be matchmakers and match up the buyer and seller. And as a mortgage lender, we're trying to help connect the dots and make it affordable and be there to support them. And it's important. And I'm not a real estate agent. I don't do real estate, but we see so many transactions. We see significantly more transactions than most all realtors out there. So we're really here, a good lender, whether it's me or a good lender that you're working with, should be able to be a good matchmaker and help put a deal together that wins for their client and also that the seller will agree to. Home prices aren't crashing, but they're flattening. So this is the chief economist with NAR. He talked about while most metro areas continue to see record home higher prices for household wealth, some areas are experiencing home price decline. So we have seen certain areas, decline a little bit overall, but it's really regionally based. So we have, if we look at the US market as a whole, and then we have Northeast, Midwest, South, the existing home single family prices by region really varies a lot. based on what the price point is and what area you're in. But home price growth is slowing, but the impact of the price hikes over the last several years have continued to affect the affordability, and many prospective buyers. Overpriced houses can linger longer in the market, diminishing seller prices. This is important that you don't overprice your house. You can actually price it low and get bidding wars. That's a great strategy right now. If it's a house that you think will get some traction in the market, price it a little bit low, maybe 3 to 5% below what you think you're going to sell it for, and bid it up. Most smart sellers understand that. Some sellers that we work with, though, that we've seen is they'll overprice their house by so much, and then the agent won't be strong enough to say, no, that is not going to work. We need to come in a little bit lower and then drive the price up. We have seen multiple offer situations, even in this market, if the house is priced correctly. So don't undervalue the pricing strategy. And if you underprice a home a little bit and drive it up, that could be significantly more beneficial than overpricing your house. Pricing matters on this. So this is a chart here. Pricing matters on over the last couple of years. So check this out. If you look at homes sold below list price, we have 62% that have sold below list price. That was very similar to 2018. Sold above. So we're getting back to kind of what these were here. But this is important because if you're listing really high, that means that your chance of coming down is higher, and then it can linger on the market. This marks the 20th consecutive week of flat or negative price growth year over year. Asking prices are falling meaningfully, welcoming new buyers. So this is a benefit of a more balanced and healthy market. Both buyers and sellers can do a transaction. People can buy a house they want to live in and make the deal work. According to researchers, when a large percentage of homeowners hold mortgages well below their current rates, they're understandably hesitant to list their house. Obviously, if somebody has a really low rate and they like their house, why are they going to move? And somebody asked me that the other day. I had a lunch with a good friend of mine, and she's like, well, why are people moving right now? Why would they give up their low rate? And I'm like, they're not moving just because. They're moving because they need to. They're moving because they have a divorce, a death in the family. They need to be in a better area for their school, health reasons. There's a reason for most people that are actually needing to move right now. They're not doing it just because they want to do it, just because. Inventory growth is driven more by homes staying on the market longer rather than a fresh supply. So back in 21 and 22, we saw new listings account for roughly 85 to 90% of active listings. So we saw new listings. Now we're seeing inventory grow because homes are staying on the market longer now. We're not seeing as many new listings come to the market in this market here. And America has a chronic housing shortage. This has continued to be affected because of what's happened in the COVID days with low rates. And we also are just not building enough. Builders are a little reluctant on building houses because of what the economy shows right now. So this is just going to continue to happen. Thanks so much for watching. If you like this, please like, subscribe, and follow for more. And then share this with somebody else that's looking to buy and sell, just understanding about the market. We'd be honored if you shared this with them as well.